Thailand will be on the road to sustainable growth when its economy strengthens and the capital market becomes solid. The capital market serves as a catalyst for economic growth by providing access to capital for investment projects, both in the public and the private sectors. The capital market is, therefore, fundamental to the country's economic success and plays a key role in the life of all citizens to ensure that the supervision and development of capital market is effective, reliable, and accessible to every sector. The Securities and Exchange Commission, or the SEC, was established on 16 May 1992 by virtue of the Securities and Exchange Act 2535BE, or 1992. The SEC has a key role in supervising all of those concerned in their relationship with the capital market. For businesses that raise capital by offering securities for sale to the public, the SEC will ensure a complete information disclosure to bring confidence for the investors' decision-making. The SEC grants licenses and supervise professionals who have the duty to assist and prepare the business of issuing securities for sale. In overseeing the stock exchange, the SEC ensures that the system for trading, payments, and delivery of securities are effective, and the securities or payments are delivered properly to the investors. The SEC also supervises the stock exchange and monitors irregularities in trading, which would lead to investors being taken advantage of, and to refer any suspicious matter to the SEC for investigation and discipline where it is appropriate. In granting securities business license, the SEC oversees the licensing process and the performance of personnel, such as investment advisors or fund managers, and ensures that they provide proper service and advice and protects the investors' assets. Furthermore, one of the SEC's main roles is to develop the Thai capital market and to support the creation of financial and investment innovation, such as derivatives, trusts, and digital assets, and to serve as a center for investment knowledge for the general public. By placing an emphasis on investor protection, the SEC not only accepts complaints relating to the capital market, but also gives information and advice to the public. We are SEC Help Center at 1207, 24 hours a day, every day. At the same time, the SEC has been in close cooperation with international regulators and organizations to keep driving the Thai capital market towards sustainability on par with international standards. Thailand will be on the road to sustainable growth when its economy strengthens and the capital market becomes solid. The capital market serves as a catalyst for economic growth by providing access to capital for investment projects, both in the public and the private sectors. The capital market is, therefore, fundamental to the country's economic success and plays a key role in the life of all citizens to ensure that the supervision and development of capital market is effective, reliable, and accessible to every sector. The Securities and Exchange Commission, or the SEC, was established on 16 May 1992 by virtue of the Securities and Exchange Act.
Good evening and Sawadee Krab. On behalf of SEC here in Thailand, I would like to welcome all of you, the audience who follow this seminar or the webinar for this evening. A very good evening, and I would like to welcome all of you to the second edition of the SEC Thailand International Digital Asset Webinar 2022. And this year is organized under the topic Digital Asset Lesson Learned and Moving Forward. SEC here in Thailand aim for this webinar to be the platform where the policy makers and government officials and those who are in the digital asset industries can learn about what happened, what has been in the year 2022, which is of course an extremely eventful for digital asset has been up to from our honorable speakers for this year 2022. What are their recommendations? What should be the policy stance? Because our speakers for this evening are from various sectors who are of course relevant into the digital asset world. But before I start off with the formality for this evening, I would like to remind you two things. First of all, for those who might seek the Thai language translation, you are able to do so because the seminar here today will be conducted 100% in English, and therefore for those who might feel more comfortable listening into Thai, you can switch on the translation service at the bottom of your screen if you watch us via the Zoom webinar platform. And second, alongside the times in which you are watching our seminar, you are able to raise the questions. Simply drop your questions in the chat box or in the chat where you are able to ask your questions, and should the time allow, we will bring your questions to be addressed for the panelists for this evening as well. Without further ado, I would like to invite all of you to the welcome remarks from the host for this event, who is the Secretary General of the SEC here in Thailand, Secretary General Runvadi Suwannmongkol.
Good evening and สวัสดีค่ะ It is my honor and privilege to welcome you all to the SEC Thailand International Digital Asset Webinar 2022. This year is a very special occasion that SEC celebrates the 30th anniversary. Digital asset is one of the most discussed topics in many different fields, including finance and investment, trade and commerce, banking and information technology, as it has a potential to impose a significant impact on the landscape of financial system and how we do businesses, make transactions, and interact with other people. However, the technology behind digital asset is relatively young. We still have to accumulate experience and continue to learn how the technology could add value to both its user as well as the overall economy, its advantages and disadvantages, and whether it could deliver its promised benefit of a greater inclusiveness, transparency, and efficiency. Additionally, as the adoption of digital asset technology has rapidly increased, some people, especially regulators, particularly concerned about its negative externalities. For example, many observe that cryptocurrency prices are highly volatile and may harm uninformed and low-risk tolerant investors. The technology itself might also have been used for illicit activities and is said to consume tremendous amount of electricity, which could negatively affect the environment. Even though technology today is evolving at a faster pace than ever before, more time is required for it to be tested and to prove its promised benefits. The major challenge for policymakers and regulators is to find a right balance between enabling innovation to flourish and ensuring investor protection, as well as the stability, integrity, and confidence in financial system. SEC Thailand employ a balanced and proactive approach to digital assets. On one hand, we have laid down a clear set of rules and regulations to mitigate any ambiguity and with regard to development of digital assets. On the other hand, we have revised regulations that may have flaws and taken enforcement actions to prevent the misconduct in the industry, in addition to providing investors with education, all of which would lead to a greater protection for investors. The recent incidents in digital asset market, such as the depegging of algorithm stablecoin, followed by the bankruptcy of venture capital funds and collapse of many digital asset lending platforms, have highlighted the risks created by the Wild West crypto space and sparked a number of debates among market participants, tech experts, economists, and policymakers. From my personal views, those incidents could help us to identify, understand, and better assess the risks related to digital assets, which will enable us to develop and put in place a proper regulatory framework to protect investors and mitigate systemic risks. With lessons from the past, I firmly believe that, to some extent, we can prevent history from repeating itself. I am very pleased that today we can bring together professionals and international experts on blockchain and digital assets from both the public and private sector, who will tell us more on the possibility, use cases, and risks of digital assets, as well as what we can and should learn from the recent incidents and the meltdown of crypto market. Ladies and gentlemen, before I conclude, I would like to convey my sincere appreciation to all our guest speakers, Mr. Bruce Schneider, security technologist and lecturer at Harvard University, Mr. Lim Tuong Lee, chair of the ASCO FinTech Task Force and assistant managing director of Monetary Authority of Singapore, Ms. Elizabeth Wallace, associate director, strategy, policy and risk department, Dubai Financial Services Authority, and other panelists from crypto venture capitals and crypto industry that will join a discussion with us. Last but not least, I would like to take this opportunity to thank you all for taking the time to join this event. Many thanks also go to Dr. Vit Sithivekin, who is going to be a moderator of this webinar. Without further ado, I would like to give the floor to our moderator, Dr. Vit Sithivekin. Thank you and ขอบคุณค่ะ Good evening.
Well, that was the opening remarks and the welcome remarks by the Secretary General of the SEC here in Thailand. And of course, in the year 2022, which are about to leave us in the next 2 months, this year is extremely eventful and totally unlike the year 2021, the year 2020, and there are many incidents that really shake the confidence of those who are in the industries, including the investors as well. And without further ado, I would like to proceed further to the next session, which is the fireside chat recap on digital asset market in 2022. And our speaker for this particular session, he is the managing director of Shalop.com and at the same time the committee member of the Thai Digital Asset Association, Dr. Piriya Sampantharak, who has already joined us in online system. Dr. Piriya, how are you?
Great, thank you.
Hi. I think that 2022 has been very eventful years. From your point of view, how would you see 2022, at least in the first 10 months? And if you need to list a couple of incidents, which are the key turning points or milestones for the future of digital assets, what will you pick?
I'm not really good at picking favorites, but yes, 2022 has been an eventful year. Very fun, a very fun time to be in indeed, if you are well protected, which is something that I've been saying for like the past few years. You should be well protected from all the risk. You should manage your risk because this is something that happens quite frequently, in fact, in the crypto industry, in the crypto market. We see a large bear market cycle almost every 4 years, and that has been going on for over a decade now. So this is, for me at least, not a surprise. But this time it's the scale of things gets larger and larger every time, every cycle, because the market just grows exponentially every cycle. So yes, this is one of the largest incidents, series of incidents. You can call it like a series of unfortunate events that happened over the past 12 months, and even more so than that. So what happened? I'll just summarize what I see. And what we're seeing here is a classic case of water level going down, and we are and we can see who has been swimming naked.
I like your analogy. Okay.
Yeah, it's a quote from Warren Buffett. Only when the tide is low, you see who's been swimming naked, and this is one such time where we see that this also happens in other market. Periodically, like every decade, every 10 to 15 years, it happens in crypto for almost every 4 years, and it's like a cleansing of sorts of a lot of investment, a lot of things that are going on in the crypto space. They look like something new. They look like something innovative. They look like something that is like world changing. But most of them, if not almost all of them, are not. They're this investment instrument, financial instrument that we have in the traditional finance world, except it's made more accessible for other people. It's made more accessible for people of every income bracket around the world, which is something I really, really appreciate. But at the same time, a lot of these businesses hide behind that facade of being something revolutionary, something new. Blockchain technology, this is going to solve all of your problems in your fridge, and it's really not that. We have Bitcoin. Everyone here in Thailand knows that I am a diehard Bitcoiner myself. I've been in Bitcoin. I've been preaching and teaching about Bitcoin for the past 10 years, and that's Bitcoin, the revolutionary peer-to-peer electronic cash systems that actually works without any intermediary, that actually works without any trust, that doesn't have any kinks in its armor. And then there are other coins that try to ride on that coattail, using the same words like blockchain technology, decentralization, but not really achieving any of those. And well, in a bull market, you can't really tell. In a bull market, everything succeeds. Every ideas get funding. Every businesses get on a bull run, and everything looks like a smart decision. Everybody looks like a genius. And it's these kind of times when liquidities are low. So what really happened is, at the beginning of the year, the Fed stops printing money, and we see quantitative tightening all around the world. Money are being pulled from the market. Liquidity are being pulled from the market. We see all sort of investment, stocks, bonds, crypto, gold, commodities. Everything goes down because money, cash, the liquid cash is being pulled out from the market. So what happens is when liquidity goes low, the ability to generate more income to service the debt that these companies take on to create their offering becomes unserviceable, become untenable. And then what we see is what we see. I mean, people start going bankrupt, business blowing up. We discover that some of these businesses doesn't really do what they promised they'd do. We have companies like 3AC, like Celsius, who promises their investor that they will not be investing in any of these DeFi projects that is just regurgitating money out of thin air. Then it just turns out that they have most of their fund in DeFi, and that blew up. They have most of their funds in Luna and Terra, and that blew up. We have investors investing in Celsius. Those fall, and even in Thailand, which seems a bit unrelated. We also have a major exchange that fall victim to that event. Zipmax to name just one, yeah. And that's just the beginning. That's just the first part of the year. Then we see all these kind of like revelations come about. Last night, we have FTX. It turns out that Sam Bankman-Fried has been using money that he created with no cost, which is called a pre-mine, using that money as a collateral to get more loans on his own platform and using those loans to buy more of his asset to inflate its price and then use the inflated price to generate more loan. And that's been found out and within one night, within one day, everything crashed. And now we're seeing Bitcoin price at 17,000. The FTT token price went down to under $10 from $20 within a few hours. So personally, I'm not speaking for the investors in Thailand. I'm not speaking for the SEC. I just say that personally, this is the kind of time that makes the market, the industry stronger because it separates what is real and what is not. Companies and business and ideas that can go through these kind of liquidity crunch can emerge on the other side stronger with more lesson learned. We see this every time, every cycle. And this is what I've been telling all my friends, all my students. Look at the top 10 crypto charts each year, and every cycle you see that apart from say like Bitcoin and maybe a few stable coins, the top 10 list of coins are never the same. Right? So these companies come and go. There might be some great ideas waiting to be found, but investors will have to do their due diligence and not treat this with a sense of mysticism that everything blockchain is going to be swell and good.
Well, I've got several questions from your first answer, but when you mentioned about this, blockchain and decentralized finance fail to deliver what they promise. What are the true cause of that failure? That people over-expected it, or what is the cause of the collapse of many pillars in digital assets industry?
This is going to anger a lot of crypto, enthusiasts here in Thailand because well, they probably hate me anyway.
You must get used to that already.
Yeah. They did not deliver on their promise, partly because they cannot deliver on their promise. It's a design flaw in the technology they choose to use. And people just kind of go with the flow with the hope that one day those flaws will be fixed. So this is the problem when you have new technology and investors who are not knowledgeable enough in that technology. Some things are impossible. It's like when you understand physics, you know that human can't fly unless assisted by some sort of machine. But when you don't know that, you trust some shaman to be able to conjure up some potion that will make you fly in the future. Now they have some promises and you invest in them and you believe that it will happen. And it's the same thing. It's the same thing. Blockchain technology has its limitations. It's very useful for creating a system without trust, a system that can operate without any trust in any third party. It's useful for that scenario, pretty much useless for any other scenario. It's a system that doesn't scale, right? So every transaction that needs to get recorded on a blockchain, which is actually a database, a distributed database, every data, every entries that needs to get recorded has to be copied and verified by every other nodes in the network. And the more nodes you have, which is having a stronger blockchain means more nodes, the more you have to record these data and process them and do all kind of housekeeping behind it. So it's not really scalable. It's useful for Bitcoin because the goal of Bitcoin is to eliminate trust and third parties. But these companies also still relies on trust. You still have to trust their CEOs. You still have to trust their developers. But then they play these, I would call it decentralization theater, to trick people into thinking that this is actually decentralized technology, using architectures and software architectures that doesn't really fit the purpose, right? So what really happens here is they promise financial inclusion and financial access to everyone. What really happened is that there are ways that you can make money using these systems. You can put your money, you can put your tokens in a liquidity pool and gain passive income from that. So it's a way to make money. But when it becomes a way to make money, people want to make it. So the network get overloaded. The transaction fees goes up to a few thousand baht. The target demographic, people who are unbanked, people who doesn't have the privilege of accessing large funds, are instantly cast out. And we have gamblers, we have people who are looking to get rich quick. So it just kind of spirals down into these gambling hole of printing money to serve more debt, which is the problem that Bitcoin actually tries to solve. Money created from debt is something that should not happen in a hard money landscape. But that happens in crypto. That happens in a lot of DeFi. I'm not saying that the idea of DeFi or crypto is bad. I'm just saying that how it's been executed just strays from its promises. And people kept going on with that, with the hope that these problems will be fixed somewhere along the line in the future. But people who really understand the technology knows that some of these problems, they either can't be fixed or they shouldn't have existed in the first place if they use some other more appropriate technology.
Oh, well, can I ask about this? Are they naked swimmers, or they will be able to find the shorts to make themselves not naked in the future? What do you think?
Well, this happens mainly because of the boom and bust cycle. It happens in every market, right? You have a bull cycle, then you have the bear cycle. In every bull cycle, as I said, every decision seems like a good one. So people take on risk that they are not supposed to be taking. And those will come back to bite you when the liquidity goes out of the market. So people who are swimming naked are people who are just over leveraging their positions. DeFi, decentralized finance, actually lends to this over leveraging by well, you have to understand how DeFi works first. Well, I'm not going to explain this here because we really don't have the time. But basically, you mint, you create some token, and then you use those tokens to create more of those tokens to get out loans and use those loans to buy more tokens. So it's actually just piling on debt and debt and debt and debt, which is serviceable as long as there are new money coming into the market. But when money stops flowing into the market, the ability to service all those debt go away. You have people defaulting on those debt, essentially. So when the default comes in, all these assets that's supposed to have value loses their value overnight. And that's what happened. That's people sometimes take on leverage without knowing, because there's also been these fallacies that people have been spreading around. Like you can just stake your stable coin in these pool and gain passive income without any risk. There are no investment without risk, and people need to know that. People need to educate themselves. This is not new to crypto. I just want to say that this is not new to crypto. This is actually a problem that traders understand, investors understand. The problem here is that people who are drawn to these investment schemes are not traders and investors who are knowledgeable in this field. So they get swept away by these dreams and dreams of riches and opportunities.
Wonderful. We have limited time here, but I have to ask this question because ultimate goal for this conference is how can we have investors protected? What will be your suggestion upon this based on what really happened in the first 10 months of 2022?
Well, I personally go by a creed that just says that you can't protect people from their own stupidity.
Okay.
Yeah. The only way that you can protect people from their own stupidity is to give them the opportunity to learn. So what I've been trying to do is, I've just been preaching about risk management. So you can make mistakes trading, investing. everyone can make mistakes. You just have to make sure that those mistakes are not going to kill you. How are we going to protect that? This is like a slippery slope kind of question, because I am firmly against strict regulations. Regulations does not protect investors. Most of the time, regulations prevent emergence of new technologies, of new opportunities, while at the same time, it doesn't really protect anyone, because when there are opportunities, everyone will find a way to access those opportunities. You close one door, they find another, right? So people will always find ways to lose money. Right. What I really think would be beneficial is, first we already doing that, is to educate more people, but that is not really effective, because people who are still illusioned by all this kind of like money making magic will not listen to any senses until they get burned. The second thing is, if there are any foul play, legitimate, illegal foul play, those will need to be dealt with promptly, and that is something that we don't really see. I'm more focused in catching the bad actor, and there are bad actor that does things illegally. Those people need to be taken care of and make like an example, so that people doesn't really want to go that route. But this is something that regulations cannot are not designed to do, and probably that cannot assist much. So I'm more on the side of light and field regulations with more efficient law enforcement.
Wonderful. We have got approximately 2 final minutes here, and I would give that to the questions from our audiences. Editorial team, can you pick one of the questions? Okay. How people can access whether a DeFi protocol or a blockchain is truly decentralized?
This is not a good question to ask me, because I would just say that none of them are decentralized. There are Bitcoins and there are other coins. Why do I say that? Because every project has an owner. And once you have an owner, an investor, VCs, right? So you have investors in a project. That project will have to do everything to benefit the investors. This takes all the decentralization out of a project, right? So it may look decentralized in nature and by the technology they use, but at the end of the day, the developers have the final say, and these developers serve the investors. So when you look at it from this lens, there are projects like Bitcoin, which doesn't have an owner, doesn't have an investor, doesn't even have a dedicated developers, right? So it's just a community-driven project where everyone runs their own node. That is decentralized. You can't even change anything without having a full 100% consensus on any change. So it's impractical and probably almost impossible to change anything in Bitcoin. But in other projects, we have DAO, like people can vote on change, and vote can be manipulated. And we've seen cases of that where people actually steal funds and use those funds to vote on changes that would like give themselves a get out of jail free card, right? So none of them are truly decentralized. But what you can assess is you can look at. I'm asking beginners to look at codes. It's a bit too mean, but like that's what we do, right? We look at the codes and see like if there are any backdoors, if there are any special commands that would give special rights to any other people. But as I said, even that doesn't really matter, because at the end of the day, these projects are not really truly decentralized. So what I'm looking at when I'm investing in these either DeFi or even NFTs or other cryptocurrency projects is that I just look at what it does, what it do. I look at it as a company, as a centralized entity, a company, and you have to be knowledgeable in assessing what it proposes to do. You might have a company that proposes to revolutionize gaming by bringing every game in the world into a connected space in the metaverse. Well, if you really think hard about that, it's really impossible. Every game is separated. You have all these IPs, you have all these companies holding on to rights and stuff. So that's just fantasy. But there are lots of projects promising things like this. Exchanging coins between blockchains without using any bridge or any oracles. Impossible. But how do you know that's impossible? Well, knowledge. Just one thing, right? So you need to be knowledgeable about the business that you are investing in, and this, it just turns into that age-old advice in investing in stocks, because these projects are ultimately just companies and their stocks.
Wonderful. I wish we have much more time than this with a person of your caliber, as sharp as always, Mr. Piriya. Thank you very much for having joined us this evening. Thank you very much, Ajahn Tam.
Thank you.
Thank you very much. That's great contribution and great to start with. None of them is truly decentralized. Yeah? So educating, especially those who are investors, to ensure that they are well aware of the limitation and the capacity of, for example, like blockchain or DeFi, decentralized finance, for example, that might be the way suggested by Kun Piriya, because regulations alone cannot protect the investors fully. Well, now I would like to proceed further to our panel discussions upon this public policy issues on blockchain and digital assets. And I wish to invite the three panelists to join me in the screen here for the webinar. Our first panelist here, he's a security technologist and lecturer at Harvard University, Mr. Bruce Schneider. And the second speaker, hi, Bruce is here with me. Hello.
Hey,
good
hi.
afternoon. Good, Bruce. How are
Doing
you?
well. It's good morning where I am, but good afternoon where you are.
Thank you very much. Good morning, good afternoon, and good evening to everyone, because the audience are from several corners of the world. And second speaker here is from Singapore, I suppose. He's the Assistant Managing Director of Monetary Authority of Singapore and the chair of the IOSCO Board-Level FinTech Task Force, Mr. Lim Tuong Lee. Hello, good evening.
Hi, good evening.
We live in the same time zone, so it must be good evening. And another panelist for this evening, the only woman joining here, is the Associate Director of Dubai Financial Services Authority, Ms. Elizabeth Wallace. Ms. Wallace, good evening.
Good evening. Nice to be here.
Nice to meet all of you. Well, shall I start with Mr. Lim upon this? How do you see the year 2022? It has not yet concluded yet, because we still have got November and December. But how do you look at that? And what is your point of view as a representative of IOSCO and MAS upon what happened in the year 2022?
Thank you. Many lessons that we can learn in 2002. I'll just highlight three key lessons from a regulatory perspective. Firstly, there's increasing risk of consumer harm in the crypto asset market. Secondly, we need to think about protecting, safeguarding consumers from this harm, and this requires a multi-pronged approach. And thirdly, there's a need to keep a lookout for financial stability implications of the crypto asset market. So let me take these in turn. Firstly, the increasing risk of consumer harm. So we've seen sharp gyrations in the crypto asset market. So 2022 is a year where the crypto market has a large correction in value. So prior to this, we know that the crypto asset market was surged about 20-fold in a year and a half, and reached a peak of about $3 trillion in November 2021, and this has fallen very sharply in summer of 2022, and by about 2/3. So right now, the valuation or market capitalization is about $1 trillion, and it hasn't really recovered. It's still hovering there. So this was largely driven by the crash started by Terra US dollar, a stable coin. And there was a knock-on effect to the broader crypto ecosystem. And just yesterday, we saw another spate of volatility brought about from the announcement of FTX. So market valuations has fallen, and at the same time, data has also shown that hackers have stolen more than $3 billion in cryptocurrency so far this year, compared to about $2 billion the year before. And in October alone, around 700 million was stolen through 11 hacks. So actually, there's a lot of harm that has occurred to investors, and I think there needs to be some measures that we need to start looking on. So for this reason, we're looking at a set of regulatory measures to kind of shore up some basics, guardrails for the retail investors. Different jurisdictions have started to do so. MES has done so as well. We issued a consultation paper, 2 consultation papers, in fact, on crypto asset markets sometime in October. So that's what I think we all need to look at in terms of safeguarding consumer interest. A multi-pronged approach. Regulators need to start looking at what are the basic guardrails we can put in. At the same time, industry also should also take a look at what they can do to safeguard their customers. And thirdly, I think consumers themselves also need to be more aware and exercise good judgment. And finally, on the issue of financial stability concerns, I mean, we know that despite the fall in the value of the crypto assets market, it hasn't really transmitted to the broader traditional financial markets, and that's a good thing. But we cannot assume that this will be so, because the interconnections may continue to grow as more participation from traditional financial players come into the crypto asset space. So there's a need to collect data and start monitoring where the connection points may be from crypto assets to traditional financial markets. And this is something that regulators need to start looking out for and start observing. I'll just pause there. Thank you.
Thank you very much. That is from the point of view of a regulator. And now I would ask a question to Mr. Bruce Schneier, who is technologist. I mean, from your perspective, does blockchain provide more security and trust to its users and participants as far as the incident in 2021 and 22 is concerned?
Yeah, oh God, no. Blockchain is a disaster. It provides minimal security, minimal trust. And some of your previous speakers got to this, right? Blockchain is not centralized. It's not anonymous. It's not trusted. It's it pretty much in every way worse than what we have. And I apologize, since it was foisted on the world by a bunch of American, California, white male crypto bros who don't like government. It's funny. I teach a class in blockchain right now at the Harvard Kennedy School, and we go through all of this. So, but no, it is not a viable alternative. It is not a good idea. It's not going away, so I can't wish it to disappear. So this is an important meeting for us to have. But no, it provides no actual benefits technologically in any way. That's
clear. So can I ask further? I mean, how should we regulate it? Because some people might think, well, blockchain is the future, but you seem to disagree with that. In terms of policy recommendations and regulations, do you have any kind of case that you wish to bring it onto the floor and discuss?
So this is what my class is doing. We are, just because it's a bad idea doesn't mean it's going away. And then how should we as governments think about it and regulate it? Which I really do believe is where we should focus our efforts. And because of its nature, the actual Bitcoin transactions themselves can happen outside of the reach of government. And this is probably its biggest problem, that it can be used for buying and selling illegal material. It can be used for ransomware. It can be used for terrorist financing and money laundering and all of those things that governments prevent. It allows you to sort of bypass those areas. But it has to touch the real financial markets. If you have a Bitcoin, you need to turn it into real money in order to spend it. And that's the point that you can regulate. So I've had people come to my class who think about regulation. I had someone from the United States and actually someone from Israel. And they are both looking to regulate not the cryptocurrencies themselves, because that's really hard, but the exchanges, the wallets, the brokerages, the places where regular people go and buy and sell cryptocurrencies. Right? Nobody's going on to the black market and bypassing this unless they're actual criminals. If you're an investor or speculator, you're going to do it through a finance, through an exchange online. PayPal allows you to buy and sell cryptocurrencies. You're going with a regular company, and they're a point of pressure because they're a company in a country following regular financial rules, which can apply to cryptocurrencies as well. And that's really the way to think about it. I'll give you one more example. Most people are speculators. Right? They're buying and selling cryptocurrencies. They're trying to make money. They're trying to guess the market. Probably a dumb idea, but let them do it. That's legal. That's fine. If you are a net seller of cryptocurrency, you're one of several things. You're either a ransomware gang because you get the money, you're a miner because you create it, or you're selling illegal goods. That's it. So basically, we know who the miners are. We can find who's using this illegally. Another myth is that cryptocurrency is anonymous. It isn't. It's pseudonymous, and there are lots of ways to unmask people. And this is being used. You'll see it in the news as we recover ransomware payments, and that makes the news. We're getting better at regulating.
Well, thank you very much, Mr. Schneier. And that's quite an answer. That's wonderful. And can I ask Ms. Wallace upon this? How do you see, from the point of view of your organization, the FSA, what 2022, at least the first 10 months, how do we learn? What do we learn from the uncertainty and volatility and the fluctuation in the first 10 months of 2022?
Good question. I think we've learned a lot. It seems in the crypto world, things move incredibly quickly, and I'll try and not cover off what my other panelists have said, but I think we're seeing the idea of blockchain and distributed edge technology. It's not going away. We're seeing more and more use cases. Some we like as regulators, some we don't like as regulators. In terms of market developments, we're seeing market changes that are happening at lightning speed. What might take months or years in a traditional financial market is happening overnight. And I think we've all seen this in the last 24 hours with the FTX Binance developments. We're also seeing more consolidation in the market. You're getting to have a smaller number of players that are really dominating in terms of trading volume. And I think we're also seeing a lot more regulation in this space. As more and more people are buying from brokers or platforms, we're seeing the likes of, for example, Europe and MiCA, the Markets and Crypto Assets Regulation, got adopted earlier this year, will come into force in 2024, where Europe will attempt to have some regulatory oversight in this particular area. And we're also seeing increased pressure from FATF for jurisdictions to adopt the AML CFT requirements, as Bruce talked about. There is a lot of risk in this area, especially in counter-terrorist financing. And it's really important that regulators are able to adopt these requirements and have that oversight of these particular firms. And I think what we've also seen over this year is that crypto isn't completely divorced from global macroeconomic and financial market challenges. Obviously, the issues that face financial institutions around risk and governance, we're seeing those in the crypto world as well. And I think that the crypto businesses need to look at the lessons that the financial sector's made and the mistakes they've made, because there's obviously the potential for there to be a repeat of mistakes. So I think there's a lot that's happened this year. I think there's a lot that as regulators we can learn from what's happened this year. I think a really big strength the regulators have at the moment is that we are talking to each other a lot. We are engaging, we're sharing information and trying to move ahead and get some sort of more regulatory oversight of this market.
Since you mentioned about this, that you have been, regulators have been discussing quite a lot. From the point of view of the FSA, what are your policy stance upon to react with the uncertainty in the markets of digital assets? What are your key policy stance?
Great. So just to clarify, so I work at the Dubai Financial Services Authority, and we are the regulator of a financial free zone called the Dubai International Financial Centre. So there are other regulators, obviously in the United Arab Emirates, that do something in this area, but I'll just speak on behalf of what the DFSA does in the DIFC. So obviously there's a very big imperative in the UAE to support innovation and innovative developments. So what we've done is we have introduced a regulatory regime to regulate financial service providers that are providing services related to crypto. And what does that mean? It means we've put in place a very comprehensive framework that looks at all facets of the market. We look at market conduct, we look at prudential risks, we look at AML, CFT, we look at lots of consumer protection issues. And we have to think about how we're going to manage all those risks and what types of rules and requirements that we're going to have to put in place. Some may call it cautious and conservative. We would like to say balanced, but we've put in place a significant number of requirements that we want firms to comply with if they're going to offer products and services relating to crypto. Just to give some examples, we have a regime that we need to recognize the crypto tokens that firms will be offering. They're not just able to offer any token. They have to go through a whole process with us. They have to do the due diligence on the token, and then it has to be approved that they're able to offer products and services related to that token. We've seen a couple of other regulators that have carried out a similar process. We've looked at disclosure, increasing that, risk warnings. We've put a lot of technology governance and audit requirements around firms. You know, a lot of these businesses, they're solely online. You know, it's all technical. If that goes down, what happens? So we want them to have safeguards in place. We want them to be very careful about their marketing. There's a lot of false marketing in this area. Firms that are saying they'll give you amazing returns when it is impossible. We don't want to see any of that. We want to reduce the amount of leverage that platforms and brokers are giving their clients. We just see that as just such a risk in terms of such a volatile market. And then we also want to make sure that these firms have a proper prudential governance and requirements in place, and that they're able to meet the liabilities that they have to their clients. So very extensive, lots of requirements to meet, and it will take time for firms to show us that they can do that before they obviously get a license to operate.
That's clear. And can I ask you one more question about what do you think about the blockchain itself? What is your point of view about blockchain? Because I mean, it seems that there are some, skepticism towards the blockchain nowadays. And from your point of view, what do you think about blockchains after many incidents in 2022?
I think that there are some uses that can be quite helpful in terms of use of blockchain or distributed ledger technology, but we're sort of still exploring them. I'll leave it to my colleague at the Monetary Authority of Singapore, because they've had a lot of really good developments in this area where they've been able to use different types of technology to support financial institutions being able to carry out different transactions. I think there is a lot of merit in that, and I think there is benefit. But you've got to remember that this is a very big ecosystem, and crypto is just one part of that ecosystem. There are other areas that we can look at as well, and we are looking at that we will see more efficiencies in the market, but we want to make sure that they are well thought out, that there are proper risk management and governance procedures in place, and that we see a benefit to the market when they're doing this.
Thank you very much. And now I wish to ask the same question to Mr. Lim concerning what do you think about the blockchain after many incidents, many criticisms towards blockchain itself in 2022?
Thank you. We need to make sure that we distinguish the technology from the use case, right? Blockchain itself technology itself is neutral. It's how we apply the technology that's important. So thanks, Elizabeth, for referring to some of the use cases that we've seen. So actually, we see that there are use cases for the distributed ledger technology and blockchain. There are the cryptocurrency, or the application towards cryptocurrency, is just one use case, and frankly speaking, we don't think that is a very value-adding use case just on cryptocurrency on its own. There are other very potentially useful and value-adding applications. For example, in cross-border payment and settlement, trade finance, pre- and post-trade capital market activities. So we have quite a few experiments that are ongoing. And in particular, what we find that one powerful application is in that of asset tokenization, where you use technology, blockchain technology, to kind of digitally represent an asset, and that in itself can have many applications from there. So we think that tokenization is a way of possible way of the future for financial markets, and we think that using blockchain technology can bring about a lot of efficiency, right? At the same time, we feel that the technology can be used for digital currency connectivity. So when we look at blockchain and or rather the digital asset ecosystem, you do need a medium of exchange to facilitate the transaction. So popular candidates may be cryptocurrencies, stablecoins, or central bank digital currencies. So just to repeat the point, we think that cryptocurrencies are not suitable for this medium of exchange because they are highly volatile and they're not quite suitable as a medium of exchange. However, we think that there may be some suitable use cases potentially for the use of stablecoins, provided they are properly backed by high quality assets and are well regulated. That's why we had one of our consultation papers on stablecoins, how we make sure that they are truly stable. There are stablecoins and there are not so stable stablecoins. So on central bank digital currencies, there's another way to provide that medium of exchange within the digital asset ecosystem. So we see good, especially for, again, cross-border payments and settlements. However, for retail CBDCs, we are less sure. We think that the existing technology and the payments rails we have are sufficiently. There's no real. So we need to make sure that the use cases that we continue to experiment with can bring economic value, efficiency, and transparency that we would like to see in the digital asset ecosystem. Thank you.
What can I ask you one more question concerning this? Can you share the key principle of regulating digital assets? I mean, from MAS perspective.
Sure. I think just back to.
It seems that there is a problem with the signals or what?
Existing rules and So for can you hear me?
Yeah, I can hear you now. Yeah. The signal was interrupted a little bit.
Sorry.
Yeah, you are back here. Yeah.
Sure. So I just to refer to what Bruce just said. There are existing regulations in the market that can apply to the crypto asset market. Investor protection. These are evergreen rules that we have seen in securities markets, and a lot of these principles can apply to the digital crypto asset space. For instance, we have seen so much abuse in the crypto asset space, things like rug pulls, pump and dump schemes, scams. So just to take an example of a crypto asset platform, right? There are inherent conflicts of interest that a platform may have. For example, a platform can provide a buying and selling of crypto tokens, but at the same time, it also takes proprietary trading positions. This is not. This is a conflict of interest where traditional exchanges don't face, and we don't see it in traditional exchanges. Another case in point, exchange may list a coin, but at the same time, it may also be invested in the same coin. It may be an early angel investor in a particular coin, and it chooses to list that coin. Is that properly disclosed? Should that even be allowed? So some of these applications can, from traditional securities markets, can apply. You can see them being relevant to the crypto asset market. So the question is, how do you apply them? Should you take a hard stance? This allows some of these conflict of interest or roles that we see. So I think we need to take a close hard look. So that's why IOSCO is looking at this as well, because many of the IOSCO principles can apply, and that's how we hope to give more guidance in our policy recommendations, how we apply IOSCO principles to the crypto asset markets, and in where there are some idiosyncratic elements, we provide additional nuances and guidance. For example, hot and cold wallets, they are more peculiar to the crypto asset markets. And I just mentioned the whole thing about conflict of interest. And also in the area of decentralized exchanges, how do we then look at it from IOSCO principles? So we hope to be able to give you that, to give our member jurisdictions a bit more clarity on that when the IOSCO ahead. Yeah, thank you.
Well, thank you very much, Mr. Lim. It seems that Mr. Schneier seems to want to say something. Anyway, if you think that blockchain is useless and digital asset is not reliable, what should be the future of finance? Fiat regime, or what should be the next step for finance world?
Is it this to me? So yes, we cannot. I think regulators have thought about banning it, and I just don't think that's going to work. That just pushes it into the black market, and that makes it unavailable. That we really need to think about regulating. And the previous speaker was right that there is so much fraud in this space that because of the lack of regulation, you're kind of seeing 300 years of securities fraud in a year. You have unregulated securities, you have wildcat banks, you have just Ponzi schemes, just fraud after fraud after fraud. And those frauds are perpetrated by people. And if we can't go after the people because of the countries they're in, we can stop citizens of our countries from accessing them. I think it's very important to protect consumers. It's a speculative asset. It feels like a mistake to me, but speculators are allowed to speculate. But I think they do need to follow regulations. Something discussed in my class is whether we need new regulations or the old ones suffice. And the consensus is that existing financial regulations are now good enough. We don't need new regulations here. And we just need to apply them. And I'm seeing my co-panelists nod, which is good, because it means we have the tools we need to regulate the cryptocurrency space. And in some ways, adding Know Your Customer, adding the anti-money laundering, anti-terrorist financing, pulls the crypto out of crypto and makes it like a regular thing. And that's better. And I think we can do that. There'll always be a black market. There'll always be ways to evade, but that's going to be true regardless. I think we can bring this into the financial network. Now, we get none of the benefits, which are not benefits, of blockchain, which is great, and it becomes a regular speculative asset and not something that is a dumpster fire of fraud.
Ms. Wallace, what do you think? I mean, after hearing from the two gentlemen already, what will be your recommendations, regulatory recommendations for regulators who might have joined us in this webinar? What should be the best equilibrium between the two things? If blockchain is still useful in some cases, but it needs to be regulated, what should be the ideal equilibrium that we still allow it to exist, but at the same time, we can minimize the risk from that? What should be the recommendation for that?
I completely agree with Bruce. I think the starting point is what rules and regulations do you have in place, and how do they address the risks that you see in the market? It is the most sensible place to start. Then there will be gaps, and then you can consider how you plug those gaps. I think regulators talking to other regulators is considerably important. Some regulators have experiences in this area. They can share their knowledge. You can learn from potential mistakes that they've made. I think you've got to consider your risk appetite very carefully. There are a whole range of risks here. you can set your own risk appetite and then consider what rules and requirements that you're going to put in place. I think you've got to consider your own internal resourcing. Some parts of this area, they're quite complex, and you're going to have to license and supervise firms that you're not necessarily familiar with. Now, in a traditional sense, you can ask very similar questions, but there are going to be areas that you're going to have to become a little more skilled in, and you're going to have to consider how you do that. And then lastly, I think one thing we probably haven't touched on is terminology. We're talking about blockchain, we're talking about DLT, we're talking about digital assets, crypto assets. But what people understand by those terms can differ quite considerably amongst jurisdictions. So you have to be very careful and clear as to what you are talking about and what that means to you, so you're talking the same language as well. We can be in meetings talking about things and completely different interpretations are taken. And you could say, for example, stablecoins. People can talk about stablecoins, but the coins they're talking about are not stable at all. There's no backing. So having the right terminology, understanding what people are talking about, and then you're able to have a far better conversation about where you want to get to.
Wonderful. Now, can I ask the same questions to both Mr. Lim and Ms. Wallace here? It seems that recently, or at least last year, 2021, some of the institutional investors entered the world of digital assets. Is that opportunities or risk? What do you think about that? Mr. Lee, gentleman first.
Well, institutional investors have every right to invest the monies. They have they have the competence, they have the resources. So I won't comment on whether what they are doing is right or wrong. But my primary objective is to protect the retail customer from harm. So institutional investors can do whatever they like. It's really up to them.
Sure.
Yeah. So my mainstay is really to make sure that there's a sufficient guardrail to inform and protect the retail investor from harm. I think that's primary on my mind. And of course, if there are financial stability implications, as I mentioned earlier. Thank you.
Thank you. And how about Elizabeth?
I completely agree. I mean, the way that regulators look at the market is you look at your regulatory objectives, how can I meet those? And that's the minimum that you would want to ensure. In terms of the institutional side, you typically find regulators have a bit of a hierarchy. You have a very strong regulatory approach to the retail market. And as you go up that sort of pyramid, you sort of don't have as many regulatory requirements for institutional professional clients. And as Mr. Lee said, that's because typically these clients can negotiate on their own behalf, and they usually have the ability to assess what loss they might have to absorb if things go wrong. So really, institutional decide where they have the risk appetite, and then they can go with that. But again, our main focus is really on the retail market here.
Oh, okay, clear. That's clear enough. Well, now, can I ask one question to Bruce? Last night, FTX and Binance, any kind of reflection from your point of view?
Oh, wow. So I don't know what happened. Tell me the news.
Oh, well, there was a problem with FTX.
Oh, so yes, yeah. I mean, we had an election yesterday, and I'm like literally not watching the news for a while just to try to calm down.
Oh, I see.
Yeah. So I mean, and I don't know the details, but problems and losses and are just happen so often. The website Web3 is going great. Is where to go for the latest in frauds and losses and disasters in the cryptocurrency space. My guess is that this bubble will burst. All bubbles do. It's just, the people who are investing in cryptocurrencies don't understand it. It's not political. It's just a speculative bubble. I think it's generational for a bunch of complicated reasons in the United States. And it will burst. It will go back down to normal and maybe down to zero. I mean, this might turn into nothing in a few years. And people are going to ride it. And I don't know enough about the details of this particular fraud or problem, but it's all a piece, I think.
Yeah. One thing, since you mentioned about Web 3.0, how will it impact the world we live?
I want to separate out, Web3 is a distributed web, a distributed internet. There are I think it's very important because it breaks the tech monopolies. There are lots of ways to do it that have nothing to do with blockchain. And in fact, the better ways to do distributed internet have nothing to do with blockchain. And I think you find the companies that are using blockchain for innovative purposes, that the better they get, the more they, just remove the blockchain and don't tell anybody. Lots of tech companies out there that use blockchain for marketing purposes only. They're not essential, they're not useful, they don't do anything, but they get funding and they get hype. And those will disappear. They might use a private blockchain, which is basically not a blockchain, it's just using the data structure. None of that matters. So I think Web3 is important. And you look at things like Solid, Tim Berners-Lee's initiative, the stuff that's happening in the Internet Archive. There's lots of very important, Mastodon is now a distributed alternative to Twitter. These are all very powerful and useful and important. To the extent they don't use blockchain, they are better. And I think that will be what happens. But I'm a big fan of Web3, just not a fan of the blockchain part.
Clear. Well, we have got another 10 minutes, and I think that there are many questions coming for our panelists here. Let's stop here. What are your observations on scams related to cryptocurrencies, digital assets in your respective jurisdictions? That might be questions for Mr. Lim and Ms. Wallace. Mr. Lim first, please.
Thank you, Dr. Witt. I think scams is just scams have always been around, and we've seen different types of scams. Love scams. We have job scams. We have payment scams. Basically, I think the typology is not very different. I think it appeals to our emotions, either love or primarily also greed. Right. So our message has been very consistent to our retail public. Please, when the returns look too good to be true, they usually are, and please do not fall prey. Look before you.
It seems that there is a technical problem with the signals. Maybe I...
Check the same typology usually promise you a real estate deal.
Maybe there's a technical problem with that. Sometimes internet signal is not as reliable as we thought. But no problem. Can I ask the same question to Elizabeth first?
Yeah, and I think I agree with my colleague from the Monetary Authority of Singapore. Scams exist everywhere. You can't go anywhere without potentially having that in your jurisdiction. What you can do is try and warn people, and the firms that you license and supervise, get them to warn people as well. Because our experience in this area is the scams typically don't come from the firms that we license and supervise. They come from the non-regulated sector, typically not even operating in your jurisdiction, but because everything is very global, they look like they're operating in the jurisdiction. They're pretty sophisticated. It looks like they're regulated. They may even have regulators' logos on their websites, all sorts of things to make them look like they're legitimate, And I totally agree, if it looks too good to be true, it's too good to be true. If the returns, and I recently saw something that said, invest in Bitcoin and get 1,000% return in 12 months. Things like that. You have to actually think about it and not go on what you've just been told. And, we are always very, very engaging and say, if you're not sure, come to us as the regulator, ask if they are regulated, ask what oversight we have. And typically when consumers come to us, we don't license them. They're not licensed in the sector. So it really is a case of consumers having to be aware as well.
Well,
there's a whole other type of scam that's not being talked about here. I mean, these are scams where you are tricked into believing something, but there's a whole other level of scams where your computer is tricked, where if you go on Twitter and right now say, I need help with tech support of my wallet, you will get lots of offers to help that will eventually steal your money. that we are seeing attacks against the computers, against the networks, where you're losing your money not because you made an investment mistake, but because some programmer made a mistake somewhere, right? There's a flaw in the code in the exchange, and now $1 billion is gone. And because of the irreversibility, it's very hard to get the money back. You know, if your bank has some fraud, we got like 3 days of clearing to figure it out and reverse it. If it is a cryptocurrency exchange, you got a millisecond, maybe. You know, it's irreversible. So there's a lot of scams where it's not the person who's being naive. It is because there's a Windows flaw, their computer's hacked, and somebody broke into their wallet and stole all their money. Right? It is not. So it's a different level of scam. And because cryptocurrency is so much of a Wild West, there's nothing to be done. So I think you have to be careful, you know, sort of doubly.
Sure. Our next question is for the two regulators. Blockchain digital asset they have no boundaries. Yeah? They're international by nature. What is the difficulty in regulatory compliance, especially for multinational platform? Shall I start with Elizabeth first?
Yeah, I completely agree. And I think that regulators are struggling with this area. So in our recently issued requirements, we are requiring the firm to set up a structure within the DIFC to have the senior management, the corporate governance, and the decision-making people in the DIFC so that we can hold them accountable when things go wrong from the entity. Now, that's a perfect world, isn't it? So, you know, you're not always going to be able to get that. There are multiple entities with similar names doing similar things that you won't have that oversight of. But essentially, this is what the FATF is trying to do in terms of their AML approach, is to ensure that even if you don't have that regulatory oversight of a firm, you know, another regulator will, because there's this blanket requirement that they have AML CFT oversight. And obviously, as years come, we will hope to have more regulatory oversight in a more coherent manner. And I know the Monetary Authority of Singapore is doing work in this area with IOSCO to see how the IOSCO principles will apply to these types of firms and how jurisdictions can look to further regulate the market. But it is a really big challenge, and I think we've got a lot of work to do to address these challenges.
Mr. Lim, anything to add with Elizabeth's comments?
Thank you. I hope my sound is okay. So to Elizabeth's point, it's true. It's a cross-border market, and is where a lot of regulators need to come together to collaborate, coordinate. And when it comes to enforcement action, it's again same old playbook by regulators. We need to be able to help one another enforce, exchange information. So which is where the ISPO principles come in very importantly, where we are able to have a fundamental application of fundamental standards, right? So that we all looking at the same principles. We can, in various jurisdictions, apply the principles differently in terms of how they are wired into our jurisdictions, our laws, our regulations. We apply it differently, but the principles remain the same. So the spirit of collaboration, cooperation and coordination is very, very important in this area, and it is what it is. We need a lot of the cross-border collaboration in this space. Thanks.
Thank you very much, Mr. Lim. I think that we have got another 3 minutes, and I've got the final question for Kun Bruce. In terms of protecting retail investors, what kind of things that the policymakers should act now? What is your recommendation?
You know, I want there to be a safe way for individuals to invest in cryptocurrencies. You know, and it's not going to be going on some sketchy exchange somewhere, uploading money and hoping for the best. It's going to be going through a conventional financial institution, a brokerage firm, you know, even if it's like Robinhood, which is, you know, very much online. And they should be given the regulations to protect consumers. That is their job. If someone wants to invest in cryptocurrency, it should be the same as investing in a stock, just as safe. So it's not putting regulations on the individuals, but on the exchanges they're going to use. And then we have to incent people to use those regulated exchanges. And that's something I think we can do today. And it's not going to stop the black market, but it's going to protect honest investors who just want to speculate.
Clear. I think we run
And these
out.
exchanges, so if I might just
Please.
add, these exchanges should be regulated in the same way across
Yes.
different jurisdictions. It has to be same risk, same regulatory outcomes, same activities.
And this is where FATF can do things, right? They can help with uniform regulations across the planet.
Clear. I wish we had more time, but unfortunately we don't have all time in the world. But anyway, I think this has been 45 minutes, which is very contributive. Thank you very much, the two gentlemen and Elizabeth. Thank you very much for having joined us. Thank you very much, Mr. Lim.
Thank you.
Thank you very much.
Thank you, Dr.
Thank
Wei.
you.
Bye-bye.
Thank you very much.
Okay, Dr. Wei.
It is very difficult to summarize because every single words, every single syllables, every single sentence are very, really ignites the way we think about how to live together in this world and how to live together harmoniously with digital assets. What have we learned from 2022 and beyond? Now I move further to the third panel discussion, which is under the topic, what we can learn from 2022 crypto market. The two panelists who will be joining us are VC Venture Capital. The first one is the Managing Director of Krungsri Finovate, Kun Sam Tansakun. And the second is the Head of Investment of Beacon VC, Mr. Warapot Kinkat Kantong. สวัสดีครับทั้งสองท่านครับ Good evening. Good evening, Kun Sam and Kun Ping. Well, shall I start with Kun Sam? Will be the same questions. 2022 is unlike previous years for digital assets. What do you both think of 2022? What kind of key impressions that it left to you? Starting with Kun Sam.
Okay, thank you ครับพี่วิทย์ครับ so thank you for inviting me นะครับ as well as the SEC นะครับ so I think if you ask about 2002 on digital asset I don't think we got that much impressions for in the crypto world นะ we are staying in the bear market right now so I think in terms of what we have seen I think with the bear market it has proven something that what is the real case on the digital asset. We could see what is the real case of the blockchain that is back engine of the original of the digital asset. This is one of the key improvements that key impression that we have been seeing in 2022. So apart from the bad thing, we see on the igniting that we see the good thing on 2022 ครับ
And how about Kun Ping, Kun Warapot?
Yes, thank you for having me here as well. And I think 2022 has been a very, very interesting year. It's been a blessing and a curse to be in the industry at this time of the year, because there are just so many events that would shape the future of the industry and prompt us to think about important questions, from the sustainability of innovation to how do we best govern the innovation going forward. So a great year from innovation standpoint, not a great year from retail investor standpoint, which includes me as well.
Wonderful. Can I ask both of you these questions? I mean, after 10 months in the year 2022, what are the key factors that VCs like both of you consider for further investment in token or DeFi project? What is the decisive factor when it will draw your attention to invest your money in there? Shall I start with Kun Ping first?
Of course. So I think as an investor, right, what we are always trying to think is return on investment, and that a lot of time is associated with values, right? We have been traditionally trying to look at whether a company could capture value, what value are they creating, how are the team capable of delivering or creating capturing those values. But 2022 promised us to try to look more on the risk side of value creation as well. Where are the risks being hidden. We try, and we are no by no means we are not an expert, but we see trying to comprehend more where the different pieces of businesses are entangle with one another, so that we can going into it more informed. And we are paying more attention to governance of the project or the company as well, because a lot of times these things are happening out of companies or investors not aware enough of how things are being made, how decisions are being derived, and those I would say are the primary ways of that we pay extra attention on towards this year.
คุณแซม the same questions. What are the key factors that draw your attention to some particular project for this potential?
Okay, I think this is has to be based on the what the banks are looking at. I think if we see in states that we see most of the big bank in states right now are investing in the blockchain companies. The same as I think we right now, I think even the Kasikorn Bank or Krungsri Bank, we are already moved from traditional bank to the digital banking already. Since the penetration of the mobile banking now is over than 70 or 80% are using the mobile banking already. So now we are sitting in digital banking. But as same as what the bank instead are looking at, that for the future 3 to 5 years, I think we are moving from the digital banking to be calling a blockchain-based banking. So that means that in the futures, all the banks now, we quite consistent that we believe in the blockchain technologies. The blockchain can help us in terms of maybe reducing the operation costs, as well as increasing the new revenue for offering the new product. So that's why right now, all the banks now, I think when talking with the VC under the bank or corporate venture capital under the bank, are investing for the startup that focusing on the blockchain technology that could help enable to increase the productivity for the banks, or as well as offering the new product for the bank. We still believe that in the future, the digital asset will be one of the key assets that we should be offering to customer. But we can talk later on, that what type of the asset that we should be offering to customer. It should be crypto, the speculation, or it should be investment token. That we'll be talking later.
You still have confidence in that quite a lot. We talk about that later on. But once you mentioned about use cases, can you elaborate a little bit more about the use case for digital assets? Which of them seems to have most potentials? Can you list a couple of them to share with all of the audiences today? Shall I start with Kun Warapot or Kun Ping?
For sure. I think blockchain promises a lot of potential use cases. A lot of them has the potential to hit mass scale. But for me personally, what I'm most excited about is using blockchain to democratize ownership. And right now, people going out in the street trying to create value for themselves, trying to make a living. They have that the thing that they are creating is not necessarily owned by them. But what blockchain promises is that everything you create, you own. Everything that belongs to you actually belongs to yourself. Whether it is your personal data, your health track record, or the content that you are creating on the digital world. So I guess that's one of the area that I'm most excited about. And I think no matter how long it is, it will eventually come.
Kun Sam.
Yeah. For the use case, I could show one of the example that actually we invested earlier. There's the company called ADEX, that the formerly name is called iStock. So this is the real use case that happens already. It's a hybrid. I would call this one is a hybrid between the old world and the new world. And this startup is offering the product that tokenizing the closed-end mutual fund or closed-end private equity, that whenever they buy this kind of asset, they're going to sell it off for 10 years. So it's closed-end already. So this is the painful for customers. Whenever they would like to sell during the 10 years, maybe the short of liquidity, or maybe someone would like to buy during the 10 years time. So this is the pain point. So this startup tokenized this very traditional asset to be the digital asset and offering to those on the private banking customers or those on the high net worth customer to be able to buy this asset. So this one is a hybrid that normally when you talk about the digital asset, you always might think that the target market is all the new generation, the generation C or the new very early adopter one. But this one actually attracted to those who are very wealthy customers already. Maybe on the baby boomer side, can also access to this digital asset offering by the AdX one. So we will see that this will be a good starting point and let the customer understand the product easily and can be able to access this one.
Since you mentioned about this, can I ask this question? I think that mainly to Kun Sam, and should Kun Ping want to contribute something, please do so. What do you think about asset tokenization? Kun Sam?
Yeah. I think this is one of the best digital asset that what I could say. This is because it has the collateral, it has the foundation. When you talk about it, most of the digital asset, you will say that what is the rationale behind? What is the foundation of this token? It is hardly because mostly are the new and innovation and on the blockchain ideas, and definitely what we say that 80% in the past were the scam one. And how can we find the 20% one? This is still hard to see on those things. But talking about the asset tokenization, when you talk about either can be the real estate, either can be any creators or any particular artist one. So this is what we call the asset one, where it already has the foundation and it's proven by the markets already on the valuation on this particularly products or particularly asset. So it's very easy. For example, the one that AdX offering is the one of the interesting one is called Marvel Private Equity Fund. That the fund that investing in Marvel intellectual properties. So anyone would see that this is one of the great asset, and everyone would like to have this asset, but it's still difficult when it's already maybe this asset has been invested maybe 5 years already. So how can you use the asset tokenization on this one and can be able to offer to those someone else? Maybe the price already been maybe 100% gain already, but if someone else would like to liquidate on this asset and someone else would like to buy on this asset. So I still believe on the asset tokenization.
And how about Kun Ping? What is your point of view about asset tokenization?
Yeah, I think it's a great invention, and it is for sure democratize this back to the ownership, and it creates a much more efficient way to for individuals to participate in investment opportunities that they would have otherwise be able to. For example, if you want to buy a house, and then if it and you expect the value to appreciate without a big lump sum of money, you wouldn't really be able to do that. But I think it's a great invention, but it's far from being perfect. For example, if you are tokenizing a certain asset back in the real world, and there's still that disconnection between blockchain world and the identity of that asset being in the real world. So that integration is still required for it to be fully robust, and that's my opinion.
Yep. Let's go back to Kun Sam. Once you mentioned about the future of banking, that blockchain can enrich, customer experience, banking services. Can you elaborate a little bit more about how blockchain can improve customer experience and service for the bank?
Okay. So we always talk about this in even the traditional bank or digital bank right now. So we, for example, when we talk about the decentralized finance blockchain startup, I always use this as an example. Like I really like the startup named Compound.finance, where they have the assets, the lending assets similar to Krungsri Bank. However, they only have 50 staff, 50, whereas Krungsri we have almost 20,000 staff.
Okay, 50 against 20,000. Okay.
With the same asset. So during the peak time, okay, during the peak time. However, what we have seen that so the blockchain itself is eliminate a lot of process inside the bank. So when you look on the DeFi one, the borrower and the lender can be matched easily using the collateral, and then can be matched and then offer without any salesperson, without the credit underwriting team, without any marketing team to do on this one. This is only few people doing this one. Where you can imagine when would you like to lending some SME product. Maybe you would like to come to the bank branch, you have to talk to the brand, you have the appraisal team, you talk with the team, come to the credit underwriting, and the process might take like 30 days. But this is only a few seconds, it's already lended and it's done. So this is I think the good example to see that how we believe in the blockchain technology. I'm pretty sure we cannot do like the compound because it's decentralized finance. It's easy when you use the coins or tokens to be backed. But at least we see that if these technologies are on the smart contract, let the robot, the blockchain run on these technologies, then it will be help and ease up the process, and we can offering and better customer experience to the customers.
Good. In 2022, one of the what I would say key incident is the collapse of Luna. Of course, I mean people start questioning about what Luna promised and finally failed to deliver. What do you see about the Luna collapse? What went wrong with them, and how do we learn from them? How should we make sense out of that collapse? Shall I start with Kun Ping?
For sure, it's a big question because a lot of people are still trying to unpack. How can we prevent another Luna from collapsing again, right?
Yeah.
But I think it's back to understand the risks of different asset and going into the investment where the risk ties to other service providers as well. And it's not an easy thing to do. Capital markets has been around for the longest time, and this is something that we are still trying to unpack. So I think, but that. For the fact that capital market takes a long time to try to comprehend how to best manage it, it doesn't mean that blockchain should take that same amount of time. So I think at least for me, my personal take is that it's the responsibility of market participant as well to try to shine the light into this entangled web of risks and try to help the investor understand it. Even if it's not the service provider themselves, I see opportunities for third party to come in and try to help the public make sense of that.
Good Sam, how about the collapse of
Luna.
Luna? Yes.
So Pivot is not and Kunwin is not only Luna now. 2 days ago was a FTT.
Oh, okay,
by
okay,
FTX.
yes. Okay, 2 days ago.
Yeah, they got a friend now already. So and now we see that the Binance might take over the
FTX.
the FTX. So I think the underlying on this one, what can we learn on this one? I think this is the underlying on the foundation of the token, or as well as I mentioned earlier, this kind of the token has not enough the underlying or proper foundation. I think one thing that maybe from the Luna standpoint, or maybe from the FTT standpoint, I don't think it because of the scam, what they would like to do the scam. But basically on the how can do the risk management. And we never have this kind of experience before. This is all very new. If you look at the traditional world, this might be happened since the hamburger crisis in 1997, or maybe subprime in 2008. So we already have experience on this one. But this one, we never know that how would it happen.
Okay.
And the risk, and everyone is quite risk averse. Everyone would like to take risk and then put all into this kind of the investment. So basically, when Luna crashed, it will be crashed in the supply chain. I mean, on the whole chain of the token. So what we have seen that we should be learning on the how to managing the risk as well as even the case like in Thailand is on the in the risk management as well. So I think we need the experienced person. We need to understand. Even the investor need to understand that whenever you investing in the and not enough foundation token, then you cannot make a good return in the long term. So it's already been proven that if you invest in this kind of token for the whole year right now, it's more loss than the other assets already.
Do these two collapses shake your confidence in algorithm, blockchain, and decentralized finance? How does it have the effect on the confidence of VCs? Kun Warapot.
Yeah, I think I still, or this is my personal belief as well, but I still believe strongly in the technology and what potential. But the recent collapse just means that we have to be extra careful when we look at different projects, and we have to always go back to trying to answer the fundamental question of what blockchain is for and whether everything that is being provided in the market is serving that or not, or is this just a fact? Saying it is easy. Trying to see it in real life, comprehend it is a little difficult. But all in all, I still believe in the technology and where the industry is going.
Wonderful, determining. Sam, do you agree with Kun Warapot? Do you share the same standpoint with that?
I think since we are the same VC, same type of the VCs, and I think we agree and we believe in the blockchain technologies. And this year, I think we have been learning that whenever you invest in a startup related to the blockchain, it shouldn't be related to the speculation token.
Okay.
So whenever you touch with this kind, I don't say the crypto, but it's the speculation token.
Speculating tokens. Okay. You differentiate both of them.
Whenever you touch it, it will has a big risk on this one. It has high chance of a default risk on this one. So touching on the pure technology on the blockchain, sitting on this kind of the foundation. So this one will be helping, and it will be a sustainable growth on this one. The token, whenever it touch on the speculation token, it's always have the high risk, and it not to be sustainable. Maybe can you jump a very high gain in the short time, then it will be affected afterwards. So I think we already, I think all the VC globally right now, we really care on this one and try to separate these two things already.
Wonderful. That's clear direction. One thing, if we look back ago, 2021, 2022, it seems that digital assets and cryptocurrency and blockchains, they are quite isolated. They are pretty independently from the outside world. But 2022, it seems that it is influenced by many factors of the world. War, monetary policy by Federal Reserve, and several aspects of the macro factors. How can you describe the interconnection between crypto market, blockchain, decentralized finance with the macro factors of the world, which is this year, of course, not a very good year for all of us? Kun Ping, how do you think about that?
Yeah, I do see it as behaving like any other risky asset. Evidently this year when the Fed interest rate goes up, the money flows into a safer asset, I would say. So in that sense, I do still believe that macro factors would affect digital asset space just like any other risky assets do. But it depends on the nature of the different one as well, right? Bitcoin versus other type of digital assets have different natures. In overall picture, I see it pretty much the same.
Kun Sam.
Okay, I think from my point of view, and it makes me and lots of people have wrong the assumption that whenever we say we always think that whenever it has wars, the most of the strongest asset would be Bitcoin, and the digital asset would be because everyone would like to stay in a safe place. However, when we see the Russian and Ukraine war, the Bitcoin has been went to the opposite side. It went to during the bear market. The price has been lower and lower. So that means that its assumption is already been wrong. That the digital asset would be the safest one. Where we compare with the other asset like gold, it's still constant in terms of the pricing. So we see that this assumption has not been proven on this one. However, we have seen in few countries that has the hyperinflation, like Venezuela, that they adopted digital asset as one of the currencies, like Bitcoins already as one of the currency. And I think this might be happen more and more for those countries who has affected in this kind of the devaluation of their national currency, or they don't have their national currency. We will see on this one more and more. But in terms of Venezuela, I mean the prime minister, the president itself, I think they all in everything. They would like to bet the country by changing the reserve into the Bitcoin, where they have a big loss when Bitcoin has been on the price dropping. But we will see on this one more and more, and try to use a Bitcoin as one of the new currency for that country.
Another question, it seems that the confidence of investors in blockchain, in the centralized finance, crypto market has been shaken quite heavily. What will be key to restore the confidence of investors in the entire world? Because both of you are, you are crusaders in terms of, hardcore believer in the future of blockchain and decentralized, which is of course not wrong. But at the same time, there might be many investors who might hold different beliefs since the collapse of Luna and FTX and some other incidents. What will be the key to turn this one back on track? Kun Sam, shall I start with you?
Okay, I think the confidence will come from the real use case. Whenever it happens, so we need to be more patient on this one. I think right now we all speculate on the what happened in the future of the blockchain. We just believe, and we said that okay, in 2 years it will be good. So right now I think the confidence because a lot of hopes now, and then many hopes have been failed already. So I think it will become whenever we see the real use case.
Wonderful.
Real use cases. In the same as like in the old day when we talk about the fintech, we'll be disrupting the bank, everyone will be talking about this, and we don't see the use case. Whenever we see the real use case, then people get more confident on this one, and already adopting to these technologies, and then confidence coming back.
That's fair enough. Patience is required for the grow up of startups as well. Kun Ping, what do you think about this? What will be the key turning point to restore investors' confidence upon this?
Right. I think two parts. One is related to what P. Sam said earlier. Is going back to the real promise of blockchain. I think as an individual industry participant have to shy away from attracting new users from the promise of high yields, and going advertise it or getting user by delivering the right the real use case that would ultimately benefit them. And I still see a lot of industry players are using these tactics to recruit new users, and it's not healthy, not necessarily for them. Might be good for them in the short run, but in longer term for the industry, it's perhaps not the best move. Secondly, it goes back to the ability for the public to comprehend the risks. Right now, the investor who would be able to make smart investment decisions are the ones who have the patience and have the knowledge to read, blockchain codes, and have the luxury of time to go out and search to see how everything entangles. And without that visibility from the industry, it would be hard for the public to gain trust. As one of the panelists said earlier, we can't stop people from making bad decisions, but when they're making bad decisions, they have to know that they are deliberately making bad decisions. It's not just out of not being informed. So I think those are the two things that would definitely bring back the investor the confidence, and it starts with the industry itself.
That's fair enough. Kun Sam, since you mentioned the real use case will be the turning point. Looking into the future in the next 2 months, when the year 2023 begins, which would be the specific areas of crypto use case that venture caps are looking? I asked both of you, basically, but starting with Kun Sam.
I think the one that I mentioned earlier, it has to be the one that easily to adopt. That I talk about the ADEX one that people can be easily access to those of the investment token. I think secondly will be what I think now since the ICO of the token in Thailand, we talk in the Thailand context, right? So we see only one or two ICO has been released 2 years ago, and it has been stopped because of some of the concern of the VAT on the tax. But I think whenever it has been solved on this one, I think the regulators are helping on this one right now. I think we will be seeing a lot of investment token to be launched in 2023. And most of them will be transfers from the what we call REIT investment type in the original type to be the investment token to be able to target on those new generation of people would like to access this one, as well as they can use on the smart contract technologies and blockchain easier to help on each of the technology. So whenever you want to reach whether to offer the coupon, the interest rate, it will be done automatically using the blockchain. No need the manual process of this one already. So I would believe that next year we will see a lot of this investment token offering.
Kun Sam, can I still stay with you? Since you mentioned that one day blockchain and new technology will replace the existing banking system, what is the intermediate role in this transition period?
It will be gradually changing.
Gradually changing.
Gradually cannot be changed from one day to another new one.
No, there must be a transition period, so to say.
Yeah. And then the transition it takes about 3 to 5 years. We believe even the state right now in states right now, most of the bank has not offering this technology yet inside the bank. But I think 1 or 2 years time it will be happen. And in Thailand, in Southeast Asia, it normally come after the state about 2 or 3 years. So we will say that 3 to 5 year time. I think this will be gradually changed and mainly will be on the back end side or maybe on the some product that using the blockchain technologies. Actually, right now, a few technologies now has been offering to customers already. Maybe on the product like called NDID, National ID, is you underlying the blockchain, which is not a full blockchain, but on a smart contract one is already offered. I think there will be more come out to the market.
Good Ping, what will be your use case that you think will happen in the year 2023, and what we should focus on in the year 2023?
Right. I think similarly to Sam, but I would like to add a little more. We think that in 2023 we will see more capital being invested from VC into infrastructure projects, enabler projects. That tends to be this belief that projects comes and goes, right? It is very difficult to know which one would stay. But for a fact that we know the business that would stay is the business that would allow innovation to happen, would help innovators build faster. Because if you think back then when you start building new apps or even when fintech first started, everything had to be built from ground up and the rate innovation is very slow. But then enablers comes into Web 2 and we see a similar trend coming into Web 3 as well.
That's wonderful. So that's mean both of you still got confidence, but of course investing in startups need patience. Anyway, good luck with both of you, and more importantly, thank you very much for your valuable times. And we are looking forward for new tangible use cases which will give a bright future for this new technology. Thank you very much. Thank you very much.
Thank you, Kap.
Thank you, Kap.
สวัสดีค่ะ
Well, let's wrap up the second panel discussion. What can we learn from 2022 crypto market from the point of view of the two VCs? Kun Sam Tansakun, the Managing Director of Krungsri Finovate and Head of Investment of Beacon VC, Mr. Warapot. Both of them have contributed quite a lot in the last sessions. Well, that's really summarized today the SEC Thailand International Digital Asset Webinar 2022, which is organized this year under the topic Digital Asset, Lesson Learned and Moving Forward. On behalf of SEC Thailand, I really hope that all of you found this platform useful and found that the contributions from all the speakers will be useful for your further steps. Whether you are policymakers, government officials, those who are in the industry of digital assets. So on behalf of SEC Thailand, thank you very much for joining us, the second edition of SEC Thailand International Digital Asset Webinar 2022. And we hope that we see you again next time. And for this evening, thank you very much. My duty is done. See you around next year. Thank you very much and goodbye.
Thailand will be on the road to sustainable growth when its economy strengthens and the capital market becomes solid. The capital market serves as a catalyst for economic growth by providing access to capital for investment projects, both in the public and the private sectors. The capital market is, therefore, fundamental to the country's economic success and plays a key role in the life of all citizens to ensure that the supervision and